Hey everyone, welcome to the KE Report, another daily editorial. This time chatting with Jim Tassoni, CEO of Armor Wealth Strategies. Jim is a very active trader or investor, really follows momentum. So that's where we're going to focus on here with our monthly calls with Jim. And first and foremost, let's just start off with the broad averages here, Jim, because look, quite frankly, broad averages still seem to be fairly strong. That I know over the last maybe week or two, it's been kind of a sideways consolidation, but there seems to be a lot of people saying, look, this rally at the end of the year and taking into account just how well the markets have done last year and this year, that look, there needs to be some sort of a top, some sort of a longer term correction rather than these short term dips that seem to be bought almost immediately. What are you seeing out there, Jim, in terms of markets and their momentum?
Yeah, hi Corey, and thanks again for having me on. It's always fun to chat with you guys. And I agree 100%. I mean, and that's why, as you mentioned, momentum, I love to just allow the markets to tell me where I need to be invested because just from a cocktail party standpoint and having conversations, I 100% agree. This market seems like it's been overheated for months, due for a bigger pullback. We get these sharp pullbacks every once in a while that are bought immediately. And fortunately, because we do just follow the technicals and the momentum of the market, we've been long, especially the SPY and the Qs, the majority of the year. It's been a great trade for our clients. As far as the broader averages go, the S&P, the SPY right now, we made that high at 609.07 back on December 6th. We haven't been able to make a new high in, can you believe it, 10 whole days? Like people go crazy because we haven't made a high in 10 days. But that does seem to maybe be setting up as a place where you may want to watch. If we approach that level again, that all-time high, that 609.07, and aren't able to take it out, maybe that starts to be a place where you're looking at resistance. I think if you're not in the market right now, and I feel bad if you're not, in order to initiate a new long on the SPY, I would definitely be looking for us to get above that level. If you're a gunslinger and you want to try a short with a small amount of capital here, maybe you can short against that level too, but that's not something I'm doing currently. And then as far as the Qs go, been long them for a while, continue to be long. They are getting a little stretched. There's minimal signs of exhaustion, but I don't really have a level here to hold against. I'm staying long. I'm long above, anywhere above basically 500, 502. I would stay long on the Qs. I just don't see a reason to be out of the market until we dip well below those. The IWM, the small caps, is telling a little bit of a different story. We had a nice rally in those, but we're starting to see some stagnation. The momentum's starting to fade in the small cap names. I think if you want to have a level, 229 in the IWM is a level we need to watch here. If we come back down into that level, it's a longer term resistance point for me, or excuse me, support point for me. And if we come back into that 229 area and can't hold it, I would look to be out of this. If you're a more aggressive trader, maybe look to take a play on the short side. But from a buying standpoint, you could maybe try to buy 229 and see if it holds there.
Yeah, Jim, the main index is very strong still, but the small caps, the IWM with the Russell, has been a laggard trade all year. Finally, some catch up to the small caps, and even the mid caps were catching up and now starting to languish a little bit. I guess just as a method, how do you decide when a sector or an ETF or an individual stock is finally topping and rolling over to where you'd want to get out of the way of a corrective move? Is there moving averages you look at? Is it a certain way that you generate price targets for support? Is it trend lines? How do you know when a sector or a stock is in danger of a corrective move?
Sure. So one of the things that we pay significant attention to are what are known as value areas. And so those are areas where there's been continual trades at those specific prices over and over again, and they tend to establish both support and resistance points. So for instance, on the IWM, just to take that into conversation here, we've seen a lot of trades happening in the 242.30 level on the high end. And then again, dating back prior to this breakout, there was a ton of trading going on at 229. That seemed to be an area that the IWM was having trouble establishing trades above. When it finally did, that's when we saw that move higher. And so we look for areas where there may be a point of resistance if we're looking for a long. And once we're able to trade above that, it relieves some of that pressure and it goes higher. We also look at different, I guess I'll call them our own version of stochastic indicators to allow us to look at the strength of a trend. And so we look at trend, we like to buy when that strength is sort of going from maybe negative momentum swinging to positive momentum because we feel like we're early in the trade at that point. With that being said, we have ways that we look when we get to certain levels. It starts to let us know, okay, maybe momentum is starting to peter out here. Maybe it's starting to exhaust. And when we see that momentum starting to wane, coupled with not being able to hold one of those support areas, for us, that's sort of our telltale sign to get out of the way. It's not a perfect science by any means. We don't get them all right, but it keeps us in the trades that are going to go higher and it helps us avoid big losers. So all in all, it's worked well for us.
Man, what a key aspect to avoid big losers, but then also be able to ride the wave higher, not get shaken off. Jim, I like asking you about the metals, mostly because, look, our audience closely follows the metals, and you come at it from very much an outside technical viewpoint of it, not biased long or short. So let's talk precious metals. Gold, silver, both are a little bit off their highs. Silver has shown a bit more strength to gold recently, but both are still at historically strong prices. But it does seem like some of the momentum has been lost in both gold and silver. So let's talk about gold or silver. Which one are you liking? How are you trading them?
Yeah, so it's kind of funny, and we talked a little bit about this before we started recording. As far as the metals go right now, we've sort of got a divergent trade going on in the space. We are currently long gold. We just recently initiated a long. We were long, as you mentioned, we were long for months, and it was a phenomenal trade, one of our better ones of the year in the gold futures contracts. Recently, we obviously saw that stall out, and we did actually we got out of that trade back in early November, and we thought about getting into a short, but we just saw kind of this wishy-washy momentum. There was the momentum to the upside had stalled, but there wasn't enough significant momentum to the downside for us to get really excited about a trade. And again, remember, we're not day traders. When we take a position, it's usually a few weeks to a few months that we're holding these positions. So recently we saw a break back above kind of this 27, I'll call it 27.18, 27.19 area. And we did get long there. Now, we obviously are below water on that trade at this point. It's back below where we initiated the trade. We are still long. We're kind of looking right here in this area. To us, this 2670 area where we're trading right around as we have this call in the futures contract is a significant area for us to hold. If we can't close above that level, we'll probably be back on the sideline in gold. As far as silver goes, this is a market where we actually have initiated a short position in this. We got short silver at about 31.95. Right now, we're holding that position. We think that this could be an opportunity for us to play to the short side, at least on a shorter term trade. We've got to stop up above 33.35. So again, like we talked about, the biggest thing for us when we take any trade, long or short, is to know where we're out before we get in. And that's really important to us. We know how much we're willing to risk on this trade. If it moves in our favor, we'll move the stop in our favor. But for now, that's a trade that we actually just recently put on in the last couple of days. We are in the money on it right now, but we'll see how it unfolds.
Well, Jim, do you have any difference of opinion on how you're looking at the gold or silver equities? They don't always track the metals perfectly. Sometimes they have very different charts. How are you looking at things like GDX or GDXJ or SIL or SILJ? Any thoughts on those big ETFs?
Yeah, so we can start with GDX. And from GDX's standpoint, we've had this huge, what we consider huge anyway, I guess it's all relative, but we've had this huge consolidation in range. We talk about value areas between about 35.19 and 39.80. Like this has been something that's been in place for over a month now, where we've traded to the low side of that range and we've traded up towards the high end of it, but we can't break through either side of that trade. So right now we're out of GDX. We think it's one of those trades where we've got this wide consolidation pattern, and we're not one to really play mean reversion. If a trader was to do that, you could look at that 39.80 and 35.19 levels. You could get long at 35.19 and either take profit or get short at 39.80. But those are the areas, until we see a close above or below those areas, we're kind of staying on the sidelines in terms of that market. Now, GDXJ, that this is one that we actually do see some negative momentum starting to creep into this market, and it's just been in the last couple of days. We had a support level at 49.36 in the GDXJ. We broke that on Thursday, and we're now trading significantly below that level. So to us, this is a no touch market for us, and if you play both sides of the market, there may actually be a short opportunity here. We would have looked to get short below 49.36. I was out of the office enjoying some family time last week, so I missed that trade, if I'm being 100% transparent, but that would have been a good spot to look to get short in the GDXJ.
Can you look at the SIL chart for us then, the silver miners chart? This one has been a bit stronger, at least in that rebound at the tail end of November to early December, than GDX or GDXJ. How does this one set up?
Yes, so the SIL chart, we're looking at it. We think this is another one. It's got kind of a similar pattern to the GDXJ actually, which is sort of funny, where we've got this wide value area setting up here. And when we have that, what we often see is you'll have a fairly long consolidation period when we get sort of these wide value areas. And for the SIL, we're seeing it between 40.06 and 34.70. And we just don't see a lot of momentum either way. Oh, there's slightly positive momentum right now, but it's literally almost at the zero line in our proprietary stochastic indicators. So for us, again, if you want to play ranges, 40.06 on the high end, 34.70 on the low end. If we get down to that 34.70, you could take a shot long down there, but know where you're going to go out, and we'd have a pretty tight stop on that, because if we start trading below 34.70, there could be a lot of room to the downside.
Well, Jim, you also mentioned that you were getting short on copper, and I'd asked if there was any correlation between silver and copper, and you said you don't really look at the fundamentals. Again, this is all momentum based, but when you look at the copper stock, we have a lot of people interested in the narrative around copper, but the pricing doesn't seem to be supporting it. So how are you looking at copper itself?
Yeah, this continues to be a trade that we've seen negative momentum and actually played this pretty well from the short side. We continue to like short opportunities here. We've gotten short and been short from almost 422 on copper. And so the trade is working in our favor right now. We think, again, we have kind of wider stops than maybe some day traders or futures day traders do. But we think as long as we're holding below 433.50 here, you continue to want to look for shorts in this market and either stay short, or if you're a long only trader, avoid it from a technical standpoint anyway, because the overall copper market, as you said, there's a lot of fundamental case for it, but in our views and what our charts are telling us, the technicals just aren't confirming those fundamental views.
Very interesting, Jim. Thank you, as always, for sharing your thoughts and your technical outlook in a number of different metals and also that broad assessment of the markets, which continue to, I guess, hang in there, be quite strong. But again, a lot of people waiting for a more long-term pullback. Maybe that all happens next year, all timed with the first year of a new administration. We'll see. Big question marks around all of that. But hey, Jim, as always, great having you on the show. And again, Jim Tassoni is the CEO of Armor Wealth Strategies. I'll post a link to that website in the show notes so you can follow along with what Jim is trading. Jim, have a great rest of your week.
Thanks, Corey. You too.